So Apple announced a 4-for-1 stock split, and even more recently, Tesla announced a 5-for-1 stock split. What exactly does that mean? What's up everyone, Gilman back with another video, Live Well, Live Wealthy. Today on the wealth side of things. I know we've taken a little break, but we're coming back stronger than ever, so stay tuned for new videos every week. So, Tesla, which is trading at over $1,500, and Apple, which is now trading at over $400, recently announced that they'll be splitting their stock. And what does that mean? That means that for every 1 share of Apple you own, you will get 4 shares of Apple, and similarly for every 1 stock of Tesla that you have, you will now be receiving 5 stocks. Fundamentally, this does absolutely nothing to the company. The company's value remains the same, right? But what it does do is for a company like Apple that's currently trading at $400, maybe a lot of investors aren't able to fork out $400 to just get 1 share of Apple. Tesla's an even greater example of this because Tesla's at $1,500, actually slightly more today, $1,554 as of the closing on the 12th. But not everyone can fork out $1,554 to own 1 share of Tesla, yet a lot of young investors do want to own Tesla. So, how do we fix this? Well, by offering a 5-for-1 stock split, what that ultimately does is it splits Tesla stock into 5. So, for every stock that was worth $1,554 before is now worth $310 and some change whenever that goes into effect. So if you are a current Tesla stock owner, you will not really be negatively impacted by this. Similarly with Apple stockholders, you won't be negatively impacted by this, but what this allows people to do is now you'll need $100-ish, depending on where Apple is when they actually do the split, or $300 to invest in Apple and Tesla. An easy way to kind of explain this is imagine you have a pizza that you're sharing with your friends. That pizza is divided into 8 slices, and maybe you don't have enough to pitch in for 1 slice of pizza. Now if that same pizza was split in 16 slices, right, and you're dividing the cost of the pizza by 16, well maybe now you have enough money to put in to the table and maybe you can eat a slice of pizza. That's a really silly example, but I think it sort of proves the point across. And although this doesn't fundamentally change anything about the company, since the value of the company remains the same, it's just split out over more shares, a lot of times what we see is with this announcement, there is a hype to the stock. So when Tesla announced the 5-for-1 stock split, the stock soared 7%, and then following by a rally the next day as well. So is this a reason to buy the stock? Not necessarily, right? Because fundamentally, nothing really changes about the company. If you liked Apple as a company before, or Tesla as a company before, they are the exact same company, but now the share price is a bit more affordable for your everyday investor. That's all we had for you today. Hope you find this helpful. If you did, please like, subscribe, share with your friends. Let's remember to be a bit better every single day, and until next time.